this. Many South Africans are overwhelmed with the rising cost of living. The cost of food, transportation and debt has risen to the highs that it has stirred up financial insecurity in some South African households. The high cost of living is against the backdrop of fixed salaries. Now, wealth manager at Legacy Family, Jordan Toy, unpacks all these challenges with us now. Jordan, thank you for making time for us. Let's start with the Reserve Bank now increasing the interest rates. That's going to be a tough one on South Africans.
Yeah, for sure. And I mean, I'm sure you've covered it extensively, that 0.5% interest rate increase we saw recently. And, rates are up almost 5% since November 2021. So, we're looking at a 14-year high in terms of where we are in the interest rate level. Understandably, times are tough. We're all feeling the brunt of that, whether it be in your vehicle finance, home loan, unsecured debt, credit cards, anything like that. You're going to feel that impact rather quickly. And I mean, a good example of that is I was looking at just some rough numbers on a 2 million rand bond on a home. You're looking at just that increase this week is about 700 rand, give or take, that you're going to pay extra.
Sure.
And since November 2021, you're talking thousands. You're talking 6,000, 7,000 rand increase on what it originally was. So everyone's definitely going to feel the brunt of that.
So what do people need to do to manage their finances in this tough economic environment? So
it sounds overly simple, but the basis or the starting point of any financial decision like this has to be built around sound information. And the starting point of all of that has to be, getting a feel for what your budget looks like. How do you know where to look at potentially trying to save if you don't actually know exactly what that looks like? And it's not just that, off the top of your head, you could probably name these expenses, those expenses that you could cut down on. But it's often the smaller ones that you're not aware of. Those debit orders that go off every month, some of them have increased. So it's a good starting point to budget. And nowadays there's a lot of free tools that make that a lot easier. In the old days, it's print out statements, spend hours combing through them, figuring out what transactions are what. Nowadays it's a lot easier, and it just makes the process a lot quicker, and you can keep track in a live sort of environment of what's going on in your financial situation.
Yeah, there are some people that are deciding to sell their homes because it's quite tough to keep up with these interest rate hikes and their bonds. Is that a good option?
It is an option. I'd say, in my opinion, it should be something that I wouldn't look at first. There are other options that you can potentially, investigate before looking at selling a home. Obviously, it's going to depend very much on the individual circumstances. There's lots of differences between, one person's home loan and another. But, it's going to depend heavily on that. And the other options that you can look at, provided that you're in good standing with your bank and that you've been, you're up to speed and you've been paying on your bond, banks are willing to negotiate. So, depending on how the market value's moved on your house, you can potentially look at renegotiating the interest rate. You can extend the bond term. There's obviously negative implications to some of these decisions, but I would definitely consider some of those as options before potentially looking at selling the home.
Yeah.
But, for example, if it's early on in the bond term, something to bear in mind is if you did sell, early on in your bonds term, a lot of the payment percentage that you're making every month is going towards interest. So selling a house early on in the term can have unintended consequences that you'd need to investigate fully. But I'd look at all options before potentially considering a sale as a last resort.
Yeah, so these are uncertain times. There are people that are wondering whether or not they should be investing and where to invest, and some people are trying to decide where should I disinvest. Any tips?
The flip side of interest rates being high is obviously we're paying a high cost on debt, but as I said, the flip side of that is any savings or interest-bearing assets that you hold are now also generally yielding higher returns. So money market funds, things like that are paying a reasonable return. It is going to struggle to keep pace with inflation. So in the shorter term, that's a very defensive place to position yourself. You're benefiting in a sense from those higher interest rates. In the longer term, it obviously depends on, your age, your time horizon, appetite for risk, things like that. But in the longer term, investments in things like equities are generally, the way to go. Obviously, it's very specific. And provided you can stomach the volatility, that can be an option to look at. But in the shorter term, the most defensive is going to be to try and benefit to some degree from those higher rates.
Yeah, so some people are trying to really survive in these troubled waters, and some are thinking of an option of borrowing. Is that best to do during this time?
I would be hesitant, and I think it's something you need to be very careful about in terms of making that decision. Especially, it comes back to the budgeting decision, right, or the discussion rather, is if you're borrowing to sustain or to keep going in an unsustainable fashion in the sense of you're spending more than you're earning, then I'd strongly advise against it. You know, the decision has to first be, are you living in a sustainable way? Having said that, it also wouldn't make sense for me to sit with an individual and say, well, you know, you're servicing debt that's costing you north of 10% a month, but we must set aside funds to invest as well. So you've got to look at a person's entire financial situation because, you know, the way interest rates are, you're going to battle some investments will battle to sort of match that cost. So you've got to look at an individual situation. It is going to differ a lot from person to person. Yeah. But I think you've got to be very careful in terms of borrowing to keep a lifestyle going if it's not sustainable. Yeah,
a lot of people are looking at how do I trim down and I end up. Are there places where people can look at where they can cut?
I mean, definitely. It's probably, you know, most people already know in the back of their minds where they can potentially look at cutting. Again, it ties into that budget that I talked about. You know, it's more the stuff that you're not aware of that you're paying for or that's costing you more than you may have thought. So you tie those two together, you know, you can save a reasonable amount per month. It's you know, everything from loyalty programs to shopping smart, you know. There's lots of different avenues. Instead of paying for a car wash or services that you'd usually pay for, trying to do more of that yourself. I mean, it's stuff that we all probably kind of know that we can do. It's obviously harder to raise your income than to cut expenses. So that would be my go-to, is look at all the wants as opposed to the needs and where you can trim down those to try and stabilize your financial situation and position yourself more defensively.
Yeah, some people are eating out every single weekend. Maybe they need to start cutting down on
Uber Eats.
And the takeout. Let's talk, just as we wrap up, the importance of just drawing up and sticking to a budget, because a lot of us never really do that. Even when we go to grocery shopping, you don't have a budget that you've worked on and the necessary things you need. You end up getting out of the grocery store with more than what you need. So how important is it during this time to draw up a budget and stick to it?
Yeah, I think it's very similar to a goal-setting exercise, right? It's you've got to set some kind of standard that you want to aspire towards, and it instills discipline in the process. You may not be perfect, you know, but it does, at least it's a starting point to say I'm trying to work towards something, and you know, in the back of your mind when you're looking at that guilty purchase, you know, it's going to make you think twice. So it is a very important part of the process. Like I said, how can you know where to save and sort of where to spend your money or not to spend your money if you don't actually know what that picture looks like? You may have a rough idea, but it's important to understand and to set those goals and say, right, this is how much I intend to get through this month on, and break it up into the different areas. And it doesn't mean that there's no room for entertainment and to enjoy yourself, but it's just to manage all of those different spending items.
And the credit card, I mean, that can really at times get people in trouble.
Definitely. I mean, it can get out of hand, but I think people forget it's also, it's kind of, for me, it boils down to, do you trust yourself in terms of managing your finances? A credit card's never been free money. I think we all kind of understand that, but it's easy to sort of try and forget about it. Yeah. But there are some positives to it in the sense of you're building up a credit score. So one day down the line, if you may, you know, want to buy a house someday, or you need to finance a vehicle, if you are responsible with it and use it as a tool to further that, then it can be used in a positive fashion. But again, you've got to trust yourself. You've got to spend in the right ways. The other aspect to consider with it is you do get an interest-free period on the credit card. So not in a perfect world, but you know, your salary comes in the month, you stick that in savings, and then use the credit card for the interest-free period. It may be, generally it's around 50, 55 days. Yeah. But you make sure that you're clearing that, and you need to make sure that you are clearing it, because the interest rate on credit cards is exceptionally high. So there's positive ways to use it, but you've got to be disciplined with it.
Yeah, just quickly, the clarity you mentioned earlier, just from some clarity on what you mentioned earlier around the arrangements you can make with financial institutions. Can you go and say, okay, I'm not able to keep up with my bond now. Can we work out on an arrangement over the next 5 months or so? Does it change the interest rate? What kind of arrangement does the bank look at when you come to your vehicle or how your bond?
No, so absolutely. I mean, I think it's got to be borne in mind that the bank would prefer that they can keep the current situation going and that you're able to stay above water on any debt you may have, because, the alternative for them it often involves legal costs. So, provided that you're in good standing and that you've been a good payer on that debt, the banks are generally willing to work with you. For example, on the property front, let's say since you initiated the bond that the market value's gone up, the bank may be willing to negotiate in terms of a slightly lower interest rate because the loan as a percentage of the value of the collateral that they hold is now slightly lower. So they're a bit more comfortable. There's a bit less risk involved for them. So that's one avenue. The extending the payment term is another option, but you're going to end up paying more interest in the long term. It's going to help you in the shorter term to just bring down that monthly cost, but in the long term, you are going to end up paying more.
All right. Wealth Manager at Legacy Family, Jordan Toy, thank you so much for making time for us.